Thanks everyone for coming back to our next edition of Econ Talks. And Gareth, the construction sector seemingly holding up not too bad at the moment. Some challenges still ahead, but those numbers not nearly as dire as we forecast. So a little bit of strength left in there for a while.
Yeah, look, you haven't seen house prices falling. In fact, you've seen them heading in the other direction. So from a residential developer's point of view, there's still every incentive to get out there and try and build more, because it looks like, that those prices are heading in a favourable direction for you. It's interesting, though, when you look at the residential consent numbers. I mean, we're still building at around about 38,000 a year. The issue around that, though, is if it hides sort of, with the headline number, it hides what's going on underneath with some of the different types of housing. What are we seeing there?
It's fascinating to see those changes. What we've seen in the last few months is that apartments, look, they've taken an absolute battering. They're very much fallen out of favour. You can't get finance for them. There's not as much demand. You've got international students who are, they're no longer a real market for apartments anymore. And so that sort of area, I think, down about 50% on what it normally would be, which is a pretty severe hit. On the other side, so that's your high density. On your low density side, your standalone houses also contracting a little bit, not quite as much interest or fun in the game there. And because of that, you've got your medium density sort of townhouses, which are riding through the middle. They're propping a lot of activity up, and you've started to see that share of building coming through from medium density starting to rise relatively rapidly, which I think also speaks to some of the planning changes that particularly happened in Auckland a few years back. You're starting to get those planning changes that are actually emerging into action. It always takes a while, but that shift in type has been quite interesting. The last one, of course, retirement units, not quite as strong in recent times, and it just seems like retirement units are in a bit of a sluggish state. People not moving quite as quickly on some of the planned retirement villages that they thought of. They'll still come through. It's just that lead time has extended.
Yeah, there were reports earlier this year from some of the operators there that they were going to just pull back a little bit on the pace of development there. So probably not too surprising that those retirement numbers have ebbed a little bit. I mean, one of the other points around the townhouses as well is that there is a bit of a regional variation in terms of where they tend to get built. And obviously, we know there's been a big undersupply of housing in Auckland, and that's been one of the sort of continuing stronger areas of the country. Not the strongest, but it has held up pretty well, and therefore that's been contributing to the growth in, or the continued growth in townhouse numbers over the last few months as well. Certainly a lot of confidence when I talk to people through the construction sector, a lot more than there was 4 or 5 months ago, just about immediate prospects, and that pipeline of work not really showing any signs of shrinking at this stage, which is good news compared to what we had been expecting.
Absolutely. And I mean, that's true even for the likes of the non-residential sector. The numbers holding up certainly better than we might have feared, again, a few months back. You've seen a few pockets of activity that are starting to come through. Although it was interesting, some of the latest numbers highlighting that even private activity, not just the public government stuff, is still coming into the market. Sure, there's a bit of softening in there, but again, much better than we might have expected. I mean, is that sort of thing going to continue, do you think?
It's interesting. It's kind of like a lot of the other indicators we've been seeing, where it has held up better, and particularly when you put it in the context of the fact that private sector work had been showing signs of softness since early 2019. And we look at the Auckland, some of the Auckland property types as well, commercial and retail activity. We were expecting those to be softening because we'd had a lot of building activity through 2019 and the early part of this year, an oversupply of space, and there are still plenty of reports around that, but it's yet to really heavily impact on some of those non-residential numbers. So yeah, it's again pleasantly surprising just how well it's been going. I mean, one of the stronger building types that we had in the most recent numbers was factory building. We don't know the full details of what's been going on there, but again, it does show that there is some confidence amongst developers and amongst businesses to go ahead with some of those projects. To be fair, I mean, when I was been forecasting non-residential activity over the last few months, I haven't expected it to be under as much pressure as the residential side. But even there, it's probably outdoing our expectations at this stage.
Yeah, although I mean the big thing to keep in mind, I guess, and just always to have in the back of your head is that these numbers, these consents, they are just intentions to build, not necessarily the actual building itself. So trying to see what gets converted and what possibly gets left on the chopping room floor will be interesting. But I guess as well, we have heard reports previously from builders who are saying, look, the next 9 to 12 months are seemingly sitting all right for our order books. It's after that that some issues start to emerge a bit more. And so I mean, I haven't heard anything different in recent times. I haven't had builders run up to us and say, hey, actually, things are perfectly fine. So it could well be that we are able to keep trucking along at some all right levels for a bit, but the expectation is still that that softening will occur once some of the key drivers of activity drop away a bit more.
Yeah, and look, our database of major projects that we sort of keep in-house and use to inform our forecasts, we haven't seen a big lift in the number of projects on that are being delayed or deferred. So that does suggest at this stage that pipeline remains reasonably robust. And yeah, like you say, the next 9 to 12 months activity, it's softening a little bit from its peak, but it's nowhere near the drop off that we had been previously thinking could be coming through. So yeah, all in all, for the construction sector, I mean, you put those factors together, you put in alongside that the government has been putting money into training apprentices and incentivising firms to take on more trainees as well, and it's pretty good conditions overall for the industry, and they'll be pleased that those are likely to continue through the first half of 2021 at least.
Yeah, absolutely. And look, again, things are still holding up all right. So we'll continue to watch if they do maintain that sort of pathway, if we do see a softening sooner rather than later. But we'll keep an eye on it. Thanks, Gareth. Always great to chat. And we'll catch you and everyone else on the next edition of Econ Talks.